What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. Got a couple cool setups and things to talk about in this video, so let's get right to it. First, we have QQQ. Okay. What I want to talk about with QQQ today is the opening range and how sometimes there's going to be levels right near your either range high or range low that you're going to want to let trump the importance of your opening range and kind of become your new level to break out of, okay? So in this instance, here's our opening range on Qs, these orange lines, and we're up trying to break out of the top of it. But what we have above it, only about 44 cents away, is some confluence. First, we have Q's largest positive GEX level, which, as we know, positive GEX can repel price as it comes towards it. And we're coming towards it from this way, so that would be resistance, right? Let's look at the 10-minute, because I use 10-minute confirmation, all right? And what we also have is, from a more macro perspective, the daily trend line from 52-week highs, all right? Here's where we closed yesterday, and you can see as we push up here to test this trend line, it's going to be right around that 371 area. So what that made me want to do is just, instead of what I would normally do is enter, watch for this 10-minute close, nice little pullback, enter around here. I wanted to wait for confirmation above 371. And now, if you were playing a couple days time on your contracts, you probably still could have just got in at the opening range retest and you would have pulled back a little, but probably not enough to stop you out. But what's great about being able to adjust the way you enter some of these strategies, whether it's orbs or inside days or 618s or anything like that, is you can just up the win rate and avoid some of these pitfalls that you might not know about. So waiting for a little bit heavier resistance to clear instead of jumping in on the orb just because I play that setup daily, you know, I avoid a lot of losses that way. And as you can see here, this first attempt was rejected on volume. Big wick up. The 371 gamma repelled. You have that confluence with the daily trend line. And at first, sellers were able to push that down. But buyers quickly shook that off, came up and closed at 10 over 371. This is my entry. I'm targeting 373 as that was a ZGEX, 0DTE GEX magnet pull. And it worked smoothly. I mean, you can't ask for much better than that. These are 10-minute candles that just keep going up, closing near highs over and over again, all the way to the target. Now, let's say that I didn't even have, I don't know what ZGEX is. I didn't have 373 as a target. Maybe I wanted to sell here. And you can see we never really got there, right? Especially when I was in my contracts. Something else can tell you, hey, it's time to take some profit. And that is your volume price analysis, right? Your volume is your effort. Your price is your result, okay? Effort versus result. Big breakout stick here on a little bit of a volume uptick. Nice continuation. Volume's coming down a little bit. More continuation. Volume staying pretty stagnant. Boom. Volume up quite a bit. Second highest 10-minute candle volume of the day. Look at the candle. It's compressed. It's not as big as these candles, and it's got about a wick of about 35% of its candle size at the top. Whether or not you had this line here or not, that should start to tell you, all right, buyers, are getting a little tired. Maybe, and they're taking profit. I should join them, okay? And then after that, you can set your break-even stop or do whatever you do, trail a stop. And if you keep getting a move up, great. If it starts to fade off, great. Protect your downside. And that's what I did. I got stopped out somewhere around here on my runners. That's fine. I was out 90% up here. Even better when you have a level and you can read price and you use them in conjunction with each other for high confidence confirmation. Okay, great. That's the Qs. Let's talk about another fun setup. We had an IV flush play today that went absolutely crazy, and it was Uber. And Uber's not even a high IV stock. Uber had an implied move of 6% today. You can calculate that by looking at the implied volatility on a name. and dividing it by 16, okay? So, Uber, you can see here in the options chain, you just look at the implied volatility, divide it by 16, that's your implied move for the day. We do that because 16 is the square root of the amount of trading days in a year, all right? So, here we have the Uber 48C contracts. And if you look at Uber on the chart, two key levels. Here, purple dashed line is your previous day's closing price. Orange dashed line, today's opening price. So it pulled back, right? But it only pulled back about 1%. And it was supposed to move 6%. So all of that implied volatility, which now expires today because the event, the earnings, which that's why it's elevated, is over. All that, not all of it, but the majority of that implied volatility goes away. What happens when implied volatility decreases? Delta decreases. Your contract price decreases. And if it's not in the money, it has no intrinsic value. So what happened to people who swung calls, really, and maybe even most of the put swingers too, overnight, trying to play this earnings gamble? They get crushed. And here is that crush shown on a chart. This is the 48C, so only $1 out of the money when we open, right? Nothing crazy. It's not like people are buying 60, this isn't the 60C or some ridiculous contract, right? This is $1 out of the money. These contracts closed yesterday at $1.98 and they opened at 44. That is an 80% loss, this person. If you bought these at close, at open, you were down 80%. So what's everybody do? Panic sell. Oh my God, I can't believe I'm down this much. Uber's trading at 47. These are 48s. How am I down 80%? They don't understand this stuff, right? And we can take advantage of that. So right off the open, I wanted to go long because Uber had kind of a mixed earnings report, but they guided up, okay? And to me, that's a reason to take calls. The thing with these IV flushes is, even though you're getting such a great discount on the contracts, you still got to be right about the direction. So I usually use the report as my guide. If it was a decent report and we're flat or even better red, I like calls. If it was a bad report and we're flat or even better yet, a little green, I like puts. That's just how I do it, okay? But this is the objective fact of these IV flushes. This is how it works and why it works. People don't understand the mechanics behind the options, and they don't understand the volatility changes and how much it affects the contracts if they're not in the money, and they wake up to this huge 80% loss. And for us, right? We don't do that. We don't take these gambles. We wait, and we get an 80% discount. And as you can see here, these contracts in 30 minutes went from 44 to 161, roughly 300% in 30 minutes. So, how did I want to play this? Well, you still try to use the chart, right? So let's look at the daily. Here's a nice pivot. You can see that we rejected there. It's a big level. Hadn't been able to overtake it until Friday, where we did, and then retest and held it Monday. So I noticed that we were going to open below this level. So I wanted to play momentum on a push back over it. Let's reclaim it. Let's go red to green, right? Let's try at least. And it did. So we can go back to the smaller time frames and entering here. Here's your pivot that we just talked about on the daily chart. Entering here. Nice push up. Even on this wick here, you're up probably 80 to 100% already. And then if you manage to stay in, you get that nice stick that gets you all the way up to almost 300% there. Just like that. 20 minutes, guys. Like I said, you still got to pick the right direction. If Uber had just opened up and dumped, I would have took my loss. But that's where risk management comes into play, right? I would have set a stop. I set a stop loss on plays like this. I'm not going to let it spiral out of control. I go pretty light size. So I want to give myself a nice safety net, right? I don't go on a full size position and then put a 20% stop because I know how crazy these first couple minutes can be. I mean, things can swing really fast with that IV crush and the contracts get spready and it's sometimes hard to get in and out. And you'll notice your premiums just really go without much change in the price, up 20, down 30, up 50, down 20, you know, it's crazy. So give yourself some wiggle room, go smaller. If you're normally at 10% of your position size and you have a 25% risk, maybe take 5% of your account and allow for a 50% risk. It's the same amount of dollars, right? But it lets you stay in the trade. It doesn't get you stopped here on a wick and then you're scratching your head while you look back and the contracts are up 300%. All right? That's the IV flush. Hopefully that helps. I made a video about this a long time ago and people seem to like it, so I figured I'd touch on it again. It is earnings season after all. We're deep into earnings season and these setups are great and they're there all throughout earnings season. Just look for those stocks with big implied moves that just don't live up to the hype, okay? Lastly, AMD. Let's talk about AMD. AMD's been on a bit of a tear lately. It had an absolutely crazy day on the 1st, going up 10%. And now it has broken out of this downtrend. Another strong day on Friday. And today it came in as an inside day. And you know we love the inside days. And so let's look at the chart. Smaller time frame. We opened in kind of the middle of the range here. Here's where we opened. Here's your inside day high, inside day low. So I decided to play the opening range breakout. And like we talked about earlier, sometimes there's levels that trump above or below your inside range. And I would consider an inside day high to trump an opening range high because it's a higher time frame, but there's enough headroom here for me to get in and have a nice profit and scale here before we even get the inside day breakout. So it's kind of like a back-to-back breakout. I'm in on this 10-minute close of opening range high, but I'm taking nice profits at inside day high because I'm expecting some resistance, and we did get it. But what's great is there was enough headroom here that you're up 35, 40% on these AMD weeklies. You can set a break-even stop. Yeah, now you're maybe only up 15, 20%, but you're not stopping out. And another nice candle. And what's great about this is you're in already, so you're not fretting that you don't really get a perfect retest. You get this nice candle on volume, confirming the inside day, and you do get a pullback, but just not quite touching it. And, you know, it doesn't always have to touch it. Don't let, you know, perfect be the enemy of great, but you don't get the ideal, pullback, but it doesn't matter because you're in here off the opening range break. So a nice little way to play these inside days, when they open up in the middle and the range is big enough, is you can kind of front run responsibly. You can front run the inside day break via the opening range break. Be taking your profits here just in case, because we could have topped here and headed back down. You don't know that. So secure the profits, protect your downside. But look, nice move up. Pretty easy. Real nice strength name. And I was looking even later if they were going to give us a glory hole, but they didn't do it. Glory hole, guys. It's a FVG inside of an intraday golden zone. So we draw the fib. Intraday price. Golden zone, the 50 to the 786. FVG, see the volume? Big volume, big stick. FVG, previous candles high, following candles low. Bullish FVG. Where is it? It's right in the middle of the golden zone. They just never gave it to us. This is an amazing setup. Look for these. I'm going to have a video coming soon, probably the top of next year, on the glory hole. This is a setup that I coined, and it's just great. It's two of the most reliable technical strategies combined, so you can't really go wrong with it. I wish they would have given it to us. They came close, but AMD had such good relative strength, it didn't quite pull back enough, but that's fine. We live to trade another day. Hopefully that helps, guys. If you have any questions about anything I talked about in this video, just leave a comment or find me on Twitter and DM me, and I'll help you out.